Hey everyone, welcome back to the channel. Today we're diving into something that, in my opinion, separates real investors, real long-term investors, from short-term day traders. And that's the psychology of red days in the stock market. I believe that what really took me to my next stage in the game when it comes to investing and it comes to preparing for my financial freedom was changing my mindset over to an investing mindset and a long-term investing mindset and getting out of the belief that red days are negative. When I made that switch in my head, everything changed. A lot of stress melted away, and I felt a lot better about the investments I was making simply because I changed my perspective surrounding red days. And I wanted to talk about that. When the market drops, most people who are investing, they panic. They check their accounts, they see red everywhere, and they feel like the sky is falling down. But for those of us who are playing the long-term game, red days are actually one of the best parts of investing. They're my favorite days to actually invest, and I'll explain why. So, when I refer to red days, simply what I'm talking about are days when the prices of individual stocks or the prices of ETFs like VU or VGT or anything like that, they drop. And sometimes they drop by a percentage point, and sometimes they drop by 5 to 10 percentage points. But at the end of the day, a red day doesn't mean something's wrong with your strategy. It doesn't mean something's wrong with your investment. It just means the market is doing what it always does. It goes up and it goes down. It's consistently moving. The market is always going to move up or it's going to move down. Even the best performing investments like VU or something like Nvidia that's up 1,500% in the past 5 years, they have tons of red days every single year. But the long-term chart, it still goes up slowly and steadily as long as you stay in the game and you keep your investments in and you don't panic sell. Most people, in my opinion, have a consumer mindset when it comes to money. They buy things at a high price when it feels safe, and when that's the hype and the popularity, they buy high. But they sell low when the fear starts to kick in and the news and the noise starts to kick in. It's basically emotional investing. It's not logical investing. And once again, as investors and having that investing mindset, we don't want to wrap our emotions up in investing. We want to keep our emotions separated from investing. To a lot of people, red equals loss, red equals danger, and red equals sell. But in my opinion, someone who's tried to build up that investing mentality, to me, red equals a buying opportunity. So this is where the investor mindset comes in. The real shift in your mindset will come when you develop that investing mindset and you start to understand that dips can be discounts. Volatility in the market is going to be normal. It's going to happen. And the only time red really hurts you is when you sell and you panic sell. When you invest consistently, whether it's dollar cost averaging daily, maybe once a paycheck or once a month, red days are your chance to lower your average buy-in cost. And if you think about it, the lower you can get your average buy-in cost, the better your investment's going to perform over time because your average buy-in cost is a lot lower. Let's look at VU, for example. If your average buy-in cost in VU is $100, right? So that I don't even know how many years ago VU was $100 a share. And right now VU's trading for $500, you're doing really, really good. But if your average buy-in cost is $550 and VU is at $551, yeah, you're in the green, but not by much. And continually buying into VU when it continues to maybe drop and dip under your current average buy-in cost is going to lower your average buy-in cost and therefore is going to give you more gains over time. So for example, if I dollar cost average into VU or into Google or into Bitcoin, I hope when I dollar cost average, I'm buying on red days because I'm getting more shares, right? I'm getting more shares or more units of a share for the same amount of money because once again, I don't change how much I dollar cost average. So, I buy about $25 every single day into the stock market. So if we have a day where the stock market is down, that $25 is actually buying me more than it would on a green day. So I actually embrace the red days as an investor, and I keep my emotions out of it. And if you also take a historical perspective on this, if you bought into the S&P 500 during the big dips, right? So when everyone was scared, the market sentiment was terrible, no one wanted to invest, right? And the days I think of are like the 2008 financial crisis, or 2020, we had the COVID crash, or even 2022 when interest rates absolutely spiked and you had a lot of these tech companies selling off. If you just continued to buy and you held on, you would be up insane amounts of money right now. But there was so much fear in the market that everyone sold, and a lot of people sold at a loss because they didn't want their money to lose more. Instead of having that long-term mindset and thinking, okay, I know it's 2008 or I know it's 2020 and things are bad right now, but what if we look, on a 10-year outlook when things are better? Is it really smart for me to sell that investment now? And some of the best investors, like Warren Buffett, right? They built wealth by staying in during the storm. They didn't avoid red days. Some have even doubled down on red days, but they didn't avoid red days, and they expect them. They have that investing mindset. They know what's going to happen. They stay very unemotional, and they take advantage of the red days in the market. So for me, right, when the days are red, right, because I check the market, I would say a couple times a day, but I don't check my account. I remind myself why I own what I own, and I always, on a daily basis, because like I said, I dollar cost average daily, I always add to my core holdings like VU and some quality stocks. Because that is the other thing too, and that's why I kind of preach so much about investing into something like VU, or if you're going to invest into individual stocks, make sure it's good companies that have good outlooks. Because for me, when I'm investing into something like VU, which once again, it tracks the S&P 500, so it tracks the top 500 companies in America, I can always assume, and I'm confident, that VU is always going to go up. So even if VU, which is 60% of my total portfolio, if VU dropped 50% tomorrow, I would still consistently buy into it, and I would honestly be happy because I'd be able to buy into it and drive my average cost a lot lower. Now, this game is a little trickier if you're investing into individual stocks because you want to pay attention to the company. If you're investing into Google, yeah, Google's going to go up and it's going to go down. I personally invest into Google, and I think Google has a great long-term outlook. But by investing into something like Google and investing into that individual stock, if it drops 10% one day, is there a reason why? Did some news come out? Did some earnings come out? And you kind of be a little bit more hands-on. And that's why I always preach that if you're really trying to have the peace of mind investing mindset, find a nice growth ETF, something that tracks the S&P 500, put your money into it, and you can just embrace every red day that comes by because you can be confident that your investment is going to go up over time. And, if you're new to investing or if you're not new to investing, and we're just, you're just a normal person who likes to invest money, it's okay to feel anxious on red days. When I first started investing, I had like $300 in the stock market, and I remember I lost 2% on my $300. So I think that's what, like $6. I can't do the math. But I remember I wanted to sell. Like I told my dad, I'm like, Dad, do I sell this? And he's like, no, you don't sell it. You put the money in the stock market, you lost 2% today, hold it. And I never sold. But I would always, every time I saw red, I would think, man, I gotta sell. Today's the day to sell. And then I switched my mindset to that investing mindset, because the thing you need to understand is the market will always reward your patience, especially if you're investing into a strong ETF. The market doesn't necessarily always reward perfection, but it will reward your patience. And the goal isn't to time the market every single time. No one's going to be able to do that. If there was one person in the world that could time the market perfectly, that person, you'll never know about them because they wouldn't share their secrets with anyone. The goal is to stay consistent, to stay calm and unemotional, and let time do all the growth and heavy lifting for you. Every dip, every correction, and every crash in history has always, and this is, you can look this up, this is historical, has always been followed by strong growth because the economy keeps moving forward. It always keeps moving forward. Innovation doesn't stop, and value keeps compounding over time. So, I want you guys to work on, if you don't have it already, work on building that investing mindset. Embrace the red days, maybe buy a little more on the red days, and know that you have the mindset that you're going to be in this for a long amount of time, and you're okay with embracing the red days because your average buy-in price is going to be lower. You're going to get more value on those red days, and you're confident in what you're investing in. So, like I said, the next time the market goes red, don't panic. Zoom out, stay unemotional, remember your plan, and just keep stacking that money slowly into your investments. So if this helped shift your perspective, drop a like and subscribe. Let me know how you're building wealth. Let me know if you have that investing mindset. And I'll see you guys in the next video. Thank you for watching.